Hello, everybody. I'm Toby Shifsky. I'm the Vice President of Dearborn Real Estate Education. I want to thank you for being here today for our Dearborn Partner webinars. You know what? 2025 is a heck of a year. I think we all thought it was going to go a little different than it did. And I think we all thought it was going to be lower interest rates. And I think we all thought that we were going to have this rebound in 2025. Because I remember in 2023 and 2024, it was stay alive until 2025. And I think what we found was that we had a lot of the same things that were happening, yeah, really in 2024, and then some wild, crazy bits and pieces. Here's what we're going to do today. We're going to look back at it. I'm going to run through some numbers. We're going to look at some studies, the National Association of Realtors. We're going to look at some Arello statistics. We're going to look at some industry statistics. And really some big news things that happen in the marketplace in 2025 that will affect us kind of going forward. So here's what we're going to do. We're going to go ahead and I'm going to ask a quick poll if I could because I want to know who's in the audience. I know we have some people who are school operators and owners. I know we have some people who are instructors. I know we have some people who are thinking about opening a school. Good for you. I think you're in a good spot to do that. And it's actually a good time to think about joining. And then we're going to cover some stuff, and I'm going to give some of the high noteworthy items that we went through in the last year, and then I'm going to give some of my opinions. I've been licensed in the industry since 1991. What is that? 34 years, something like that. And actively still have a license. I do run the Dearborn Real Estate Education along with Kaplan Real Estate Education. And so I'm bringing some of that knowledge into the industry. And so we're going to have a good look. And I think it's really going to kind of lay a foundation for what's going to happen in 2026. So let's do this. I'm going to ask a quick poll question. I want to know who's in the audience today so I can kind of tailor this a little bit towards you. And I'm going to go ahead and launch the poll. You should see this pop up on your screen, and it's who's in the audience. If you would, take a look at the poll and answer to your best ability. Once again, our polls are anonymous, so nobody knows what you actually answered on your poll. And what isn't anonymous is the chats, though. So when you put your hello, Daisy from South Texas, I'm glad you're here, but I can see that it's you in the chat. But the poll questions are absolutely anonymous. All right, so I'm going to end that in 3, 2, 1, 0, and then I'll share the results. I always share the results with you. So look at this. We have instructors in here. 50% of the people in are instructors, administrators, 17%, starting a school. How about you? 17%. Well done. And then other. So somebody's here just enjoying our little presentation. And here's the thing. I like it when people play along. Some of you have some deep knowledge within the real estate industry and within the education industry. I'd love it if we had your thoughts and comments along in the chat. Ask me questions. I'm going to answer as we go along. Okay, so let's do this. I'm going to stop sharing and then I am going to go ahead and jump right into the presentation. Hang on 1 second. There we go. Let's start off. 2025. You know what? What a year. And I should tell you that these numbers, right? We're not all the way through 2025. And most of the big organizations, when they report numbers, they're about a month to 2 months behind. So we just finished November. Mostly what we have is stuff through October, but I think we see a pretty good trend going that we can kind of understand what's happening in the marketplace. And so, the number one thing, then I think people always ask me, how is the real estate education industry? How's it going for you? And, are there a lot of people coming into the marketplace? Are they not coming? And I can tell you this, real estate education that I've been doing since 2002, so 23 years, I consider us to be a trailing indicator for what's happening in the marketplace. Meaning, if the real estate market is considered a good market and it's hot, it's usually about 6 months after it really starts to be hot that we start to see an influx of people coming into the marketplace, meaning real estate. What a great second career, right? We have a lot of people, this is their second or third or even fourth career is coming into real estate. And it really kind of lends itself to that ability. There's the self-starter, there's the freedom of being your own boss. And generally, as you get a little older, you get a little wiser, you get a little smarter, you start to understand things about communities and people and connecting with people, and you generally have a little bigger sphere of influence. And so it's a great second career. But people don't want to go into real estate unless they think it's a great real estate market. And what drives their perception of what a great real estate market is really just a couple things. When they watch the news and people see that home prices are going down and people are getting foreclosed on, that has a tendency for people to say, oh, that's not a really very good real estate market. In fact, I would ask a question. How many of you were in real estate or around real estate in 2007, 2008? And you know what? Because there was a big event that happened in 2007, 8. Go ahead and throw a chat in if you were still in the business in 2007 or 2008. Uh, because there was a big thing that happened back then, and that was the mortgage crisis, right? We had this mortgage crisis where after a giant run up from like really 1999, 2000, 2001, 2, 3, 4, 5, even into 6, we saw this huge run up in real estate values. We saw this big run up in how hot the marketplace was, and it was really driven because it was really easy to get a home mortgage, and the interest rates were okay. They were in the mid fives, right? We're all begging for mid fives right now, and so there was this huge run up in the real estate marketplace, and and then it turned because all of a sudden, a lot of these adjustable rate mortgages started to have their rates increase, and people went underwater. They didn't have enough equity in their home, and they started to, really fail on paying off their mortgages. And so there was this huge crash, and coming into real estate as a career was considered really bad. But I can tell you, there were still transactions during the crash. In fact, those people who quickly adapted their business to understand foreclosures and short sales, they killed it during that time period. Even though the perception until about 2011, because we had to go through the financial meltdown crisis also after that, there was a stigma on the real estate industry, even though starting in about 2011, we started to see home sales transactions go up. And in 2012, they were up significantly from where they were in 2010 as the market started to really people understand that it's actually a good market. And what I can tell you is before the crash of everybody, during the mortgage crisis, before that big drop, we saw the drop, and it was about 6 months after the drop that we started to see a decline in licensing enrollments. And it wasn't until about 6 months after the market really turned around in 2011, 2012, that we started to see more enrollments in licensing education. And it's kind of followed that trend for as a trailing indicator. So goes the perception of how good the real estate market is. Kind of so goes real estate licensing enrollments. And so, what's the real estate marketplace like around you right now? Right? So, because there's certain parts of the country, we're going to go through this in a second. There's certain parts of the country where the real estate market is really hot right now, and it's doing really pretty well. And there's other parts that are really facing some serious headwinds, some stiff headwinds, and a lot of you might be in those areas also. So we're going to talk about what that means, this perception of the real estate market. What I really like to talk about is just some real data about what is actually happening in the marketplace, and then we can explore a little bit more about what the perception is. So right now, existing home sales, which is kind of the really, I use this indication as a primary kind of forecasting tool for me. So in my role at Kaplan, I have to look out, 10 years in advance 5 years in advance, 3 years in advance, and a year in advance, and have to run projections, right? Forecasts and plans, 3 year plan, 5 year plan, 10 year plan. And one of the things, one of the biggest things to look at is really existing home sales. It is the meat and potatoes and the driver behind our economy. Trillions of dollars of real estate ownership transferring hands every year, and it drives billions and billions of dollars of economic activity. And so here's a nice little chart from the National Association of Realtors, and it kind of just shows since 2015 all the way until to really, it says January 2025, but it really extends in until about October. What is the existing home sale seasonally adjusted rate? Meaning, if every month was equal, what would the average rate be at the end of the year? How many home sales? And if you look here, it looks like it's sitting right at about 4 million home sales. And that seems like a lot until you look backwards into January of 2021 and even 2022, when we were over 6 million home sales. So what does that mean? From 4 million to 6 million is a 50% increase in transactions. And remember, in real estate, most real estate salespeople don't get paid unless what? Unless a property closes, unless you have a transaction. So the number of transactions actually determines the full pool of commissions available. Right? This might be elementary for some of you, but we're gonna get in a little bit deeper in a second. But the idea is this: if you don't have transactions, you don't have enough money in the pool to support, how many agents in your marketplace. There's only so many mouths you can feed out of so many transactions. And if you increase the transactions by 50%, well, holy smokes, that's a lot more money flowing around, right? That's a lot more supporting of the career. So what happens though is we go from really record highs of 6.4, 6.3 million units sold down to 4, 4.1, 4.2, and or below. So we're going to take a look at some of those numbers in a little more detail by region, because there's an effect that happens by region. And so if you're looking at this map, kind of determine where you're at. So when we say the West, it's really New Mexico, Colorado, right? Wyoming, Montana, and everything West. That's the West, not just California. It's everything West. And this is the National Association of Realtors. Since we're using their data, we're going to use their scheme here. Midwest, right? That's the, everything from essentially Ohio all the way to North Dakota, all the way across, Illinois, Indiana, Missouri, Kansas City. I'm in Minnesota sitting right now. So you guys can see where you are at. The Northeast, New York, and then the South. And we're going to talk a little bit about what happened during the pandemic, but what really happened in 2025 is significant. And let's take a peek at it. Here are some deeper numbers. Hopefully you can see this on your screen. I'm going to just talk to the numbers a little bit. This is existing single family home sales. And so these are, and once again, if you have any questions at any time, just ask. We got Chris Robinson on, who's a national account director. If it's about some sort of a question about school and products and how do we take advantage of this, you can ask me and we'll play along. But here's a real estate marketplace. These are the actual figures. This is what is exactly going on. And these are adjusted, right? Seasonally adjusted rate, meaning if you look at the overall US and that first big column, overall in the US, down near the bottom, 2025, October, it looks like it says we're going to do 3.7 million, 3.710 million transactions this year. We're going to talk about a couple of different organizations that are projecting out how many transactions, but more importantly in this slide, take a look at your region, where you're from. You can see the Northeast, the Midwest, the South, and the West. And if you go all the way down, the most recent numbers, right, who are working into this kind of seasonally adjusted rate, you can see your region and what you're doing. And then you look down even before, at the very bottom, you can see versus last year. There's one region that is really seeing a bit of a decline in the number of units sold, right? So down 2.9% is the West. That was that whole, Montana line west uh, is down 2.9%. Every place else is up in the number of units sold. So kind of a little bit of a mixed bag, but overall, we're up in the total number of units sold. So there has been no crash in 2025 year to date. That hasn't happened. And what about pricing? So people ask, well, well, yeah, you might have sold more, but prices are crashing all over the place. But are they? I mean, I think the prices really do kind of depend on where you're at. And it might even be super localized to where you're at. And generally, what you see is a lot of the areas that were very hot during the pandemic are cooled significantly since the pandemic. And so if we look at this one, you can look at the sale price of existing single family homes. Whose prices are still going up? I can tell you in Minnesota, prices are still going up. They're up. In fact, my wife just sold a home last week, multiple offers, above asking price, sold in 3 days. So, and that's in a $800,000 category. So there are homes selling. And depending on where you're at, if you look at the US, you know what? The home price is up 2.2% overall. If I'm in the Northeast, it's up 6.7%. What does this tell you? If I'm in the Northeast, you're in a cooking hot market right now. If you're still up 6.7%, the Midwest, 4.8%, the South, ooh, 0.6, and in the West, as we saw, zero point 0.2, but fewer transactions, but still up in price. Now, what else is happening in the marketplace? Well, we know that the most of the news we see is that number of listings are coming up. So, number of opportunities for buyers. Once again, all of this is playing into what is the perception of the real estate market and what is really happening in the real estate market. And if we know what's really happening, then we can gauge our business about 6 months after what's really happening is going to start driving what happens in our business. Okay. So here's your real estate, kind of a different view of what's going on. 1 year home price gains from Q3 of 2024 to Q3 of 2025. Once again, thank you, NAR, National Association of Realtors, for providing this. But look at that. You can see the red arrows in Florida or Texas. You're seeing some trouble spots, but you're also still seeing, like in California, you have some areas that are declining and you have some areas that are going up. But if you look across the Midwest and all the way into the Northeast, you're seeing some really tall green candles. And the taller the line is on that candle means the higher the home price gains, right? And the longer the red line, the larger the decline. And so if you look way down in South Florida, you can see, that marketplace is a little under stress for pricing. So the word on the street in Florida is it's not a very good real estate market right now. Although there is still demand. Although priced right, homes will sell. But the perception is it's not really good. And so that affects us in our industry about how many people are going to come into it. How many people are excited about a second career in a depressed market in Florida, where it's maybe hard to get insurance, it's hard to get cash buyer to buy a property if it's got a certain situation with it. It's more difficult than it was 3 years ago when Florida was the hottest marketplace in the country. So we may be seeing some correction there. We may be seeing some outside forces like getting insurance because of hurricanes. This past year helps. We didn't have a whole lot of hurricane action in Florida, so that helps. But as of right now, that market looks like, well, you know what? It's maybe not a very good career choice right now. Although I can tell you there are still transactions happening in Florida. So what does it mean? Generally, what it means is making sure you're in the right place at the right time, prepared for when the market turns, because it will turn. They're not making more oceanfront property in Florida. They're not making more beautiful rolling hills property in Southern California, the marketplace is the marketplace. And so being ready for what's happening is going to be important. Let's go on here. So I thought this was interesting too. And this is a 5-year look at what really happened to home prices and home price gains since pre-COVID. So really Q1 of 2020. I remember I was in Palm Desert, California on a bicycling trip, and I came down with a cold. I had the fever and chills for 2 days. I'm like, what is going on? It was at the end of February in 2020. Of course, in hindsight, I had COVID. One of those ones before everything broke loose and everything shut down. But from that point till really Q2 of 2025, so this is just mid-year 2025, look at your area and look at the price increases. I know some of those states up in the Northeast are small, but you can see when you get green lettering, like for Connecticut and New Jersey and New Hampshire, those are the gains in the last 5 years. That is outstanding. When it comes to personal wealth, when it comes to people sitting on homes with a lot of equity in it. So people talk about, oh, the mortgage, all this people and the job loss and people can't afford anything. And so we're going to be looking at mortgage foreclosures. It's really just not happening. People have so much equity in their homes that, in fact, they're almost like the mother goose sitting on the golden egg. They're afraid to get out of the nest because they have so much equity in their house, and they still might even have a mortgage on it, but it's at a super low interest rate. And so this is where we get the old golden handcuffs where people don't want to leave. But the good news about this is most homeowners have in fact, the last stat I saw was over 30% of all homeowners own their home outright now. No mortgage on it. Interesting. Interesting. So foreclosure is not anything that's rearing its head. You hear in this isolated cases here and there, but as of this point, there is no mortgage meltdown happening. New rules, new guidelines in place. And there's so much equity in these homes that it's really hard to see a home going into foreclosure prior to somebody just turning around and selling it. And maybe they got to lower their expectations on price, but they could easily sell it before they're going to go into foreclosure. So let's do this. So key point summary on the real estate marketplace in 2025. Prices flat or slightly up, right? I mean, depends on your region. If you're in South Florida and you're in Miami, well, I can tell you, if you're in Miami, there are some areas in Miami where the prices are a little bit down, but there's other prices in Miami. I mean, you go down to the ultra wealthy spots, they're not going down. So it really kind of hit or miss on where you're at, but generally overall, they're flat or up across the country. Demand, buyers are still a little sidelined, but it's changing, right? Interest rates keep ticking down. We just got off, last week was the best month of buyer action, meaning purchase agreements came in last week at a higher rate than they have in any month in the last 14 months. Once again, that was from the National Association of Realtors. That's good news for the industry. Inventory's up. People are moving. You got to always move. There's always death, divorce, right? What's the other D? Somebody help me with that. But there's always people having to move. Relocation, right? So you've always got things that people are selling. But when are people going to be ready to, all the boomers getting ready to downsize? And they're willing to let go of their home and their 2.7% mortgage because they are ready finally to make a move. They've made enough equity in the house. They're ready to go buy their forever retirement home or move to something else. But inventory is ticking up. And then affordability. Affordability really is the big key for why the buyers are sitting on the fence. And affordability is really a combination of home price and how much the loan costs for the house, right? So it's a combination of what is the interest rate on a loan and what is the price of the house. some people would tell you, and I kind of believe it in the real estate industry, buyers don't buy a home price, they buy a monthly payment. And that's true for a big segment of homeowners. And generally, it's your first time home buyers or maybe even your first time move up buyers. They're buying a monthly payment. And if the combination of the house price and a combination of the interest rate on their mortgage depends on if they're going to make that move. So the affordability, right, is the big thing. What's my monthly payment going to be? What's my nut? Taxes, insurance. Everybody's insurance has gone up immensely in the last 2, 3 years. So that's another factor in the affordability. And then and taxes. Taxes have gone up just about everywhere in the last 3 years. But once again, harken back to that map I showed earlier that showed home values increasing by 35, 45, 55, 65, 67% on some states. Home values increase over the last 5 years. That's amazing. Amazing, amazing amount of wealth generated right there. So affordability is moving better as interest rates lower and as prices are not increasing at what they used to be. They are flattening more and more, maybe slightly up. Historically, I can tell you that home prices for decades, you were happy if you had a 2% increase in home value. 2% each year. That was kind of the mark. And really, it's only been in the last 5 years that we've seen this crazy move on a different level. Really crazy move. So there's your key point summary about the real estate marketplace. And then moving into really the real estate brokerage business. This is another big category for change in our marketplace that we should be aware of, especially if we're school operators and we're trying to understand who's driving the people into the business of real estate. If we do real estate licensing, you are going to want to know who in your area is driving people into the real estate industry. And you should be making connections with those local people. You should be, I know a brokerage where, every Friday, they're taking their local brokers out for happy hour every Friday, making sure that people are happy and excited and they know that they're providing the licensing education to their recruits. You should be understanding exactly what's happening in your local real estate brokerage. And I'm going to give you kind of a macro look because this macro look nationwide, but it will drive into your local markets. And it may affect some of the relationships you already currently have. If anything, it might give you some insight to who you should be talking to going forward if you're in the real estate licensing industry. So this is a big one. Compass, right, acquires Anywhere Real Estate for a all stock deal of $1.6 billion. Now, if you don't remember, Anywhere Real Estate is like Coldwell Banker, Century 21, Sotheby's International, Corcoran Group, Better Homes and Gardens Real Estate, and a slew of others. So Anywhere piled it all together, right? It used to be called Realogy, then it went to Anywhere. They piled it all together and they let these brands operate, sometimes in the same marketplaces because they fit a different demographic, right? They have maybe a lower price income, a lower price socioeconomic class, and then they might have their Sotheby's doing the high-end luxury stuff. So that's Anywhere's model. And there's a couple big brokerages that do that same sort of model, but this was a big deal. Compass acquires Anywhere Real Estate. The deal is not finalized. It's supposed to finalize in 2026, but everything seems to be marching forward. I don't think anybody's going to get in the way. I don't think this administration is going to get in the way, and so I think this is going to happen. And it's going to create the basically the world's largest real estate firm, right? 340,000 real estate professionals on estimate. I think that's a worldwide number. I think the actual number in the US would be something like 240,000 to 270,000. The brokerages are a little slippery when they want to really announce how many members they have. Some are publicly traded, some are much more public facing. They use it as a calling card. But the idea is this: it's without a doubt going to be the largest real estate company. And what does that mean? What does that mean when you combine, these two large brokerages into now the world's largest? And it can mean a lot. It can mean, well, how about this? Let's start with why would they do this? And why they would do this is because there's certain amount of synergies that are gained when you have two separate companies and you bring them all together. You have the ability to use one technical stack, so one stack of tech tools, one stack of really stack of everything, one resource, one accounting resource, one you essentially get to become more efficient because you're leveraging your services, your inbound services across a broader spectrum, and you get a bigger reach. And you can start to leverage your technology stack, your CRM, your marketing tools across a broader audience, and that's why they do it. They also do it for other reasons. And one might be because they want more negotiating power, regulatory negotiating power. They want more negotiating power, maybe if they, the Realtors Association for decades has been the voice. And the turmoil and the upheaval that happened because of the commission lawsuits, 2 years ago, kind of played out last year. But the Realtor Association is still looking for, and I think they're getting closer to figure out who they're going to be and what their role is going to be. But these large brokerages are now another player to really command a large audience of people. And and you should understand what they're doing and how they're recruiting and who they're recruiting and how they're getting their education done, because some of those things will start to meld together too. You should understand that and be aware of it. And so this will change our industry, this. And it's not slowing down. As a matter of fact, as we look, Rocket Companies, that's Rocket Mortgage, acquires Redfin, right, for 1.75 billion as an online brokerage mortgage integration. So here's a mortgage company who says we want to actually become a brokerage. We're going to remove friction between traditionally, mortgage company kept separate. In fact, I know that big brokerages have mortgage companies who they specifically keep separate from their brokerage. They even name them different names. It's big companies, Remax, Home Services. But here's a one where a mortgage company actually said, "Listen, we're gonna go right into this." And we're gonna buy this brokerage who has a unique business model. If you're not aware, Redfin has a model where the agents are employees, truly employees. And I know a lot of you might know that, some of you don't, but they are employees. And those employees, so different than a regular brokerage model where the agents are independent contractors, right? They call their own shots. The broker's a business partner, not their boss. Different here. So Rocket buys Redfin. Redfin is a company where you are an employee and your broker is your boss, and you're an employee in that organization. So here's a place where Redfin, who's done a fabulous job of providing industry statistics. If you ever really want some good, straightforward industry statistics, which maybe doesn't necessarily have full rose-colored glasses that sometimes you get out of the National Association of Realtors data, Redfin does a great job with their data. I use them lots of times citing resources. So, but the key here is here's a mortgage company buying a brokerage and saying, now we're going to do it all together. And we're going to be able to utilize this infrastructure that Redfin has in this model. And everybody who comes to Redfin in real estate, you're just going to use you're going to use all these ancillary services that we provide, and title company and mortgage and everything else that you can understand and keep all the money in one ecosphere. So this whole consolidation that's happened within the real estate marketplace as the number of transactions come down and 50% of the transactions come out of the marketplace, like we talked about earlier, and the amount of money available shrinks. Brokerages have to do something. Sometimes they just close. But when you're a big company, you've got to look for help, or you got to look for synergies. You got to look for how you're gonna be prepared for when this market turns and takes off, because it is firm belief that there is still a demand out there. Piles and piles of millennials still haven't bought. Millions. Some estimates are over 6 million millennials still have to purchase, want to purchase. That's above and beyond people who are already transacting in the marketplace. So if you think about it, we're doing 4 million transactions this year, and there's another 6 million people out there who want to buy a house. That's 10 million. That's a huge demand that's pent up. And so I don't think there's any shortage of demand, but it's about having the affordability equation in there. So Rocket acquires Redfin. And then one more of these kind of big, this was a big year, frankly, for these kind of mergers, acquisitions. Stone Point Capital, investment in Keller Williams. It's called an investment, but it's a pretty heady investment. They haven't disclosed what it is, but there is a Stone Point Capital took on a significant ownership stake in the firm. That was and Keller Williams, being privately held by its founders and leadership only, they finally decided, listen, we're going to need some muscle. We're looking for a partner to help carry us on to the next stage. Once again, this is about, if you don't know Stone Point Capital, look them up. They've purchased a couple real estate businesses. If you know Lone Wolf Contracts, right, for electronic signatured contracts, works with a lot of learning multiple listing services, and they have a bunch of ancillary services that they are securing around the real estate transaction. Once again, looking for ways to leverage all those different ancillary services within one ecosphere. And so it's a really big deal that happened more than I can remember in all my years of real estate. These three large organizations doing this is important, and it will affect our marketplace. How exactly? Not exactly sure, but I have some thoughts, right? Some key point summaries here for us in the age of acquisition and mergers. And so looking at this, massive consolidation happening. Even I would call, there have been real estate offices that have closed also. That's a sort of like a form of consolidation, because most of those agents go somewhere else, right? But in massive organized consolidation, you're going to see fewer but far larger players. And what does that mean, right? Because they're going to try to do this vertical integration of services, one-stop shop for buyers and sellers. They're gonna try to hold everybody in the one ecosystem there. So if they get them, they want them from the alpha to the omega in their real estate transaction deal. Pressure on traditional franchise and small local brokerages, and potential shift to commission fee dynamics. So some people are going to become aggressive in how they're going to compete against some of these big one-stop shop organizations. What does that mean in the marketplace? What does that mean to the amount of money that an agent, full-time or part-time agent, can make in the real estate industry? And really, this middle bullet is important for our schools and operators who work and have relationships in the local markets with boutique brokerages and a lot of mom and pop shops and budding up and coming, and new. And they also have you have the Compass, and you have the Anywhere, and you have the Berkshire Hathaway, Home Service America. You have all those too. But some of you have relationships with these, and so staying connected to them to understand the pressures they're under is going to be important for you to understand how that's going to affect your business, and may force you to create, stronger relationships, or even more and different relationships in your marketplace. So it also allows for a kind of a potential for innovation, more tech-driven, integrated real estate services. You're going to see, this slickening of the whole transaction, of how the interaction happens. People talk about removing the friction out of the transaction. You know what they call the friction? You, the human being, is friction, right? And so how do they get rid of human beings in the transaction that don't need to be there? That can be done using a machine learning, or an algorithm, or or something that can be automated, that can be consistent and accurate every single time, they're looking for those kind of innovations. And so being aware of what that means and how that affects you, that's a big deal. If somebody said, I want to remove 50% of the human beings from a transaction, that would be significant to our business. I don't think we're there yet. I did a seminar, a couple of weeks back, and people asked me, "What is AI going to replace, the agent?" And my answer is, until AI can smell cat pee in a house, no, it's not. Because until you go and you walk through a residential property with a client and you look out and you see the view and you see the neighbor's yard and you see and you smell the cat odors and the dog odors and you see the look and feel and they all have questions until the AI learning can do that and actually guide somebody through all those emotional ups and downs that you get. I don't think the human's going to be replaced anytime soon within that real estate transaction. There's just so many variables that happen all day long. Regulatory. There's another big part. Regulatory, market power, and competition concerns. So I'm going to move pretty fast on this one. There was a time when being involved directly in lobbying for or really against a large corporation who came into the state and wanted to change the real estate and insurance licensing laws. And I remember that they had the clout and the wherewithal, and they really had the 200, at that time, $250,000 a year lobbyist was a lot. They had the lobbyists and the money to go and hound the regulators, the legislators. And they got a voice and they got an audience and then they got a hearing. And then we were asked, what do you think of this? At the very end. And we had to raise our hands and say, well, this probably isn't really good for the public. But they had the ability to influence the regulations. And I can tell you, they got regulations changed. Now, luckily, we were an active participant in regulatory environment, and we were able to kind of cool the jets and soften the blow and protect the public and protect our business a bit because they were there working for their business. But what happens is you do have to understand that these big firms, these big organizations have the muscle and the clout to affect your regulatory environment. You just need to be aware and stay diligent so that you understand what's going on in your marketplace. I always tell people, with a stroke of a pen, you can be in or out of business in a regulated industry, which we are. Regulated education, licensing and continuing education. So stay alert. Stay alert. All right. We're just about going to wrap up, but what I'm going to talk about is the size of the marketplace real quick. Current NAR membership, according to the 2025 report, NAR has about 1,453 realtors, members, as of May 31st, right? And earlier in 2025, they had a bigger number. So it looks like they're maybe down about 45,000 licensees. And if you look at the year before, you're comparing it. If you look at that last bullet, they're down about 75,000 realtors in their membership. As a guide for me, throughout the years that I've been in real estate and in real estate education, 35 plus years, the number has been that about 2/3 of all licensees are realtors. About 2/3. There are some states where there's some parts of New York where you're not a realtor to do business, but in most residential areas, in order to do real estate, you were a realtor. But not everybody who has a license is a realtor or does residential real estate. There's commercial real estate, there's property management, there's business brokerage, there's all these other things. But as a guide, about 2/3 of all licensees are realtors. So I think that's an interesting number. And I think we need to be aware because back when the commission lawsuits came out, people thought that the number of real estate sales professionals was going to drop by 40%. That didn't happen. Not even close. In fact, it didn't even drop by 10%. By all accounts, it hasn't even dropped by 10%. And what we're also finding is the demise of the 6% commission in the marketplace is overstated. In fact, there are some segments where the average commission has actually gone up in real estate. And that is in the first time home buyer, because agents working with first time home buyers go, why would I do this for less money? This is hard getting a first time home buyer across the finish line. I'm going to ask for more because I have to ask for my own commission now. And on the higher end, on that jumbo and up, the 750,000 and above, they're actually getting more for their services because they're an expert. Their expertise, they can demonstrate the expertise, they can demonstrate the value. So, so there's a groups in there that are actually getting higher commission splits than they got before. And that what does that mean? Once again, the perception was that the commission structure was going to, the new commission rules were going to kind of destroy the real estate career as a way to make money. And people talking about, like I said, 20, 30, 40% of the people going out and commissions going down and not making money. That hasn't happened. But once again, the public doesn't know that well yet. So as that comes out, then we see that they're 6 months behind, right? All of a sudden, actually, you know what? The commissions are doing great. People are making just fine money. In fact, they're overall they might be down like 0.1%, but and there's some categories where they're actually up. And so that's the kind of information you want when you're thinking about, coming into this business. I actually think we're in a pretty good spot right now in real estate because we are at the bottom, bouncing along the bottom, and I see that there's some really good demand and there's really big things happening that can allow for a pretty quick push. Once again, total licensees. Now, don't be confused. I know I said 2/3 is represented by 1.5 million. Arello, right? If you don't know who Arello is, look them up. But they're a regulator, educator organization. And they say there's about 2.9 million real estate licensees. And that could be true because that's by state. Now, I know myself, I live in Minnesota. I'm right by the border. Many, many agents have a real estate license in Minnesota and in Wisconsin. Well, that would be counted as two licenses here. So, what is the real estimate? If I had to put my hat on, I would say we're closer to 2 million active individuals, some working in multiple states, right, who are actually active and working in real estate in some capacity, be it property management, be it residential, be it business brokerage, but whatever you need a real estate license for, somewhere about 2 to 2.1 million total. And 2 years ago, I said there was 2.2 to 2.3 million. So a little bit of a decline, maybe 10%. Maybe 10%. What does it affect you? It affects you for continuing education enrollments. It affects you for replenishment. Remember, brokerages today, they have a model. They need bodies. A lot of real estate brokerages charge monthly fees, desk fees, and tech fees, and the agent sells a house, that's great, and they get a little bump, but they have desks that they have to fill. And so they continuously recruit people into the marketplace because that's their business model. And so for us, you have to be aware of, what is their model, what's happening in the current marketplace, and because on average, once again, another rule of thumb, you see about 10% of the people out of the marketplace, out of being a real estate licensee, they drop their license in a regular time, 10% would drop their license, but 10% would come in. That's the replenishment rate. So if you had a state of 40,000 licensees, you can say 4,000 licensees are going to go out and 4,000 are going to come in to make it even. That's kind of the rate. Now they've been ticking up a little bit each year for the last couple of years, and now they're falling down a little bit as people retire, and maybe the marketplace doesn't look so good to people's eyes because they're still on the perception. But once again, it might be a little bit higher people going out, a little less coming in, but the average over the last really 40 years is about 10% out and 10% in. And so that's kind of a number that I use. All right. Real estate education, what does that mean? What happened, in this marketplace with the movement of the drive down and perception of the real estate marketplace, even though prices continued to kind of go up or stay flat, even though the number of transactions actually went up, the perception, right? And these big mergers, acquisitions, well, I can tell you, it does affect us. And how it affects us is, licensing education. I can tell you across the country, some markets up a little bit, some markets down a little bit more, right? I can tell you that there's some parts in Florida where they're down a little bit more, but there's also parts up in the Northeast where they're up more, down about 10% is the for licensing education. So if you're operating a school and you looked at it, you can say, oh, what did I do last year? What did I do this year? If you're above this, if you're doing better than down 10%, you're doing something right. Keep rolling. If you're down more than that, you got to look around. You got to make your connections. You got to make sure you got the right products. Talk to our team. We got Chris Robinson there. We've got other advisors for you on our customer support and client success team that can help you get the right products in play, making sure that you're priced properly, all those kind of things, right? Post licensing down 15%. And the last one, continuing education down about 20%. Now, these two right here are an indicator. They're an indicator about if people are actually making that next step after they came in licensing. Are they getting their post licensing done? And or are they doing their continuing education? Some people are holding off. Some people maybe are going to a referral network. Some people are going into some other place. But right now, this is a bit down for 2025. 2026 will be a very telling year. Much of our education that is delivered, there are several states that have a even numbered year requirement for renewal, which means 2024 is up and 2025 is down and 2026 is up. So this number is a bit inflated, but overall, out of all partners and everything, I can tell you that it's probably down, maybe not down as much as 20%, but overall, you know, so so that's what's happening in that marketplace. And that's real estate education. What do we see going forward? Actually, we're going to have a webinar coming up on what we see going forward in 2026. But I can tell you the groundwork is laid. The interest rates are coming down. The homes are flattening for value increase, which makes things more affordable. And the demand is still there from really a big group of people, the millennials, who have some of them have still 6 million of them have still not purchased. So we see good things on the horizon, and I want to say thank you for being here today. If you have any more questions and you want to continue the discussion, let us know. You can follow us on social at Dearborn Real Estate Education. There's LinkedIn, Facebook, YouTube. Go ahead and take a look at that. I know Jamie just put into the chat there a link. If you look forward to, you can register for the next webinar here. And once again, if for any reason you missed part of this or you want to give it to somebody else to look at, we're going to go ahead and we'll email it out to you within the week after we get done editing it down and making sure that we have everything included. All right. Thank you all for being here. Once again, I'm Toby Shifsky, Vice President of Dearborn Real Estate Education, and thank you for attending.